Hey guys, what's up? It's Eldus from Forex Trading Alliance. Take a look at this reversal entry right here. This is the kind of entry every trader wants to catch. And in this class, I'm going to show you exactly how I get them, the supply and demand prices, how I mark the zones, and how I time my entry. We'll also talk a lot about risk management and how to actually scale your trades. So if you've been struggling with timing your entries, this will help a lot. Let's jump right in. All right, so to find the perfect reversal entry, you need supply and demand. So on the chart, I can see a demand zone just over here. Beautiful. It's a demand zone because there was a strong push towards the downside, couple of basing candlesticks as seen over here, and an impulse candlestick towards the upside showing institutional market pressure. Because this is a reversal entry model, you have to draw the supply and demand zones on the swing highs and lows. Now if you're a beginner forex trader and don't know how to do that, you can use this indicator called higher high, lower low. This tool helps to spot swings easier and find entries much quicker. After we identify our demand zone, all we need to do is wait for the first touch. Price needs to return to the big daily demand zone to grab orders. Once price touches it, this is where we want to enter our first trading position. This is what I like to call your early reversal entry. Your stop loss will be the full size. You always want to cover the demand zone plus add 33% on top of that just for, wicks and stuff. You don't want to get kicked out of the market too soon. But the idea behind the early entry is simple. You only open 1/3 over here because this is the early entry. We might get a better entry. If the price does pull back a little lower, this is your second entry. So as you can see, it pulls back lower. Maybe we would open another 1/3 over here. So we already have 2/3 open and 1/3 is closed, or actually not open. But this is what you want, so you would open it, boom, something like that, wherever you enter, and then your stop loss is identical to the first one. Take profit, same thing, just a little bit more exposure. And now you probably get the point. If the price gives even a deeper pullback, the ideal entry, or whatever you like to call it, this is where you enter your last 1/3 of trading position. So somewhere over here, stop loss, something like that, take profit like that. So take a look at this. First trading position, 2.6 risk reward. Second trade position, nearly 4. Third trading position, 7.38. This Forex entry reversal technique is so good that I passed my Funder challenge using it. And you can too if you apply it correctly. Now let's just take a look at what happens with the trade. As you can see, it goes towards the upside and reaches our area of first target profit level. This probably would be your second and third if you want to scale it down. Really, it's a personal choice. I would probably close somewhere around here myself fully because I like to take the money quicker. Forex market is unpredictable. Anything can happen. You want to take that money and put it in your pocket rather than have unrealized profit. You have 5k running as a trade and the next day you wake up, it's minus 5k and then you're crying. All right, now look, since we pushed the market a little bit, I just noticed we have another area of demand. So let me show you another example. This is another area of demand zone. Same reason, nice impulsive move towards the downside, basing candlesticks, and of course, a push towards the upside. So let's just ignore this area zone for now. Let's make it red and just focus on the green rectangle. And we are waiting for the price to pull back. Boom. This is where it pulls back. This is the first touch of the area of demand zone. This is where we want to have our first trading position. Again, the same take profit rule, 33%. I'll just eyeball it for now. And something like this would do. This time is a little bit different. We can have a smaller risk because the box is smaller. This is our fresh demand zone that was never touched. It has a lot of orders inside the zone. So we should expect that once it touches, there's going to be an impulse move towards the upside. So let's just see what happens. It goes towards the downside a little bit more. This is where potentially you could enter another trading position. Stop loss just like that, target profit, and as you can see, we're using the same technique. 1/3, here, and another one over here. And if the price suddenly shoots towards the upside, it's fine. You don't have to risk your full trading position because you're still making money, right? This is still very profitable. 2/3 of your original size is totally fine, right? So let's just see how the market behaved. And boom, it pulled back and then pulled back. And my God, it just went towards the upside eventually. There we go. It would have hit your target profit, whatever, if you was patient. Now, there's another thing. I want to talk about top-down analysis real quick because it really does help you out when you're trading or trying to get that sniper entry you're always looking at. So take a look at this demand zone, right? Now let's take a look at a higher time frame. Let's say the weekly. Just take a look over here. Perfect kind of area of demand zone, right? It's a big brother, small brother type of context, right? This one over here, drop, base, rally, right? It was fresh, it was never touched. Bam, it goes inside it and makes a demand area zone on the daily time frame, which is over here. And we can see the same thing happening if we switch to the 4-hour time frame. Just take a look. Boom, can you spot it? Nice area zone as well. So we have 4-hour, daily and weekly context, right? And because we're trading inside this huge cluster, this 4-hour zone becomes very strong because it's a concentrated zone, right? There's level inside the level inside the level here. And this is the best way to get that sniper entry. If you don't want to use the scaling model I talked about, this is probably the best way to trade entries. Just find these concentrated spots. So if we have a look, touches the area zone, there's a clear reaction, bullish engulfing candlestick. This is the first touch of the fresh 4-hour demand area zone, and one more touch goes towards the upside. There was a break of trend over here and push the market further up. But this is another way to kind of trade. So let's say if we entered somewhere over here, 33%, just to cover the 4-hour demand zone, we wouldn't be covering, the daily or the weekly because our stop loss is just too big. But you have to make sure that you kind of understand where the market will likely go next. But anyway, I just wanted to show you this Forex entry model. I really like it. I hope you do. If you want to join my trading group, link down in the description below to learn Forex. Here's another video to watch. And anyway, take care, Lions. Have a wonderful day. Stay safe and goodbye.